So the stock market sold off hard today. What are we looking for when it comes to the S&P 500 and the Nasdaq 100? What we're going to start with here is the daily chart on the S&Ps. Now today we lost this floor, this most recent floor, this consolidation, we can call it distribution, that realistically started all the way back towards the middle later half of August. If you kind of look at this support system that we were building here on the S&P going back to August the 19th, look at those lows, pull it up on your chart right now. I'll give you guys a couple of seconds to pull up the S&P chart. So as you're getting that chart pulled up, you guys can kind of see what I'm talking about. I'm looking at the daily time frame. I want you guys to start off looking at August the 19th, and then I want you guys to look at the 21st. I also want you to look at the 22nd. I want you to look at the 28th. So you can see there's a nice floor that was being built here. Now, you can also see on my chart that we were getting pinned below this resistance level here. This resistance is the linear regression channel. It's a linear regression channel 50. You can see that the S&P was setting up a tight range. Well, today, not only did we sell off, we sold off 2%, $11 on the day. We closed at around $552. Currently in the after hour session, we're trading a little bit lower than that now. Now, is the market going to continue to flush, or was this a big trap for the next push higher? That is undetermined. But what we do know is that we came down today and we tested the 50-day moving average. Now, the 50-day moving average is very, very important. Generally speaking, whoever controls the 50-day moving average is in control of the stock chart, predominantly for that month or for the foreseeable future. Let's say the next trading week, the next trading couple of weeks, the next month, right? And if we're below the 50-day moving average, well, now it becomes a little bit more of a scenario where we're not necessarily looking to buy longs in the in the markets, right? We're not looking to start adding up to our long-term portfolio if we've just started a sell-off below the 50-day moving average. Now, the other argument is that this is just a back test to the 50-day moving average down here at 549, and we're going to bounce. Then in that case, it would be an opportunity to start loading up the longs for this, potential bounce. Here's how I would play it. If you're a swing trader or a long-term investor, if you're going to start to dabble and you're going to start to buy in and you're going to start to add some size, those positions get taken off the table if the S&P loses $547 and closes below that. Okay, because if we lose $547, this market is coming down a lot more. The next support is not sitting until $535. So I don't want to start long positions if we're en route to $535 on the general overall markets. Now, if we do manage to hold this 50-day moving average, this rising 20-day moving average, and you start to dabble into some positions here, well, you can get that dollar cost average down if you've got some prices up in this range. And when we do make those new highs, you can either if you're a long-term investor, start adding to your position again, or if you're a swing trader, you can start to sell out above 564, 570, so forth and so forth. Okay. Now, if we look at the triple Qs, which is the Nasdaq 100, this chart's a little bit more aggressive, and we have now lost the 50-day moving average yet again after reclaiming it on Friday. So this chart is a lot more damaged, okay, than the S&P chart. Is the Nasdaq leading the way and the SPY is to follow? Or is the SPY going to help lift this broken Nasdaq chart? Now, for me, anything below today's lows, because we're already below the 50-day moving average, the 20, so forth and so forth, anything below $459 is a short position. We've got room down to 452. That's ultimately your price target. I'd be looking for taking profits on a short-term trade into 453. Okay. Now, once we cover those positions, those short positions into 453, what we're then going to look for is, do we get that aggressive bounce? And if we do, we can look for that dead cat bounce. But if we start to get below $452, we've got a tremendous amount of room down to our next area of support, which is going to be the 200-day moving average. And the last time we were at the 200-day moving average sparked a humongous rally. So being that we held the 200-day moving average once, bounced, however, put in a lower high, are we going to come back down into 440 and then lose the August 5th lows of around 423? If that's the case, we could potentially be looking at some massive problems going into the end of the year. Okay, when I mean massive, I mean a lot of room down. Okay, so let's hope for the bull's sake, let's hope for the market's sake that we can kind of consolidate in this range and start to push back up. But again, the short-term trade idea here for the Nasdaq at least is anything below 459. We are shorting that into 453, 452. Okay, that's our profit taking zone. Now, if we're looking to get long, I'm going to need to reclaim at least some of this supply. Okay, so I have no long positions until I see at least 2-3 days more of price action that gets back up over supply. So right now, the short position looks much better than the long position. Again, any type of gap up or green opening, I'm going to look for the rejection and then a loss through prior day's low, which is going to be today, September the 3rd's lows. To the long side, I have no interest in taking long-sided trades until I at least see 2 or 3 more days and I at least see us get back over the 5-day moving average, back over the 10-day moving average, and that would entail us to get over $475, $476. So we're a long ways away from doing that, which is why I'm leaning more towards the short side. Again, congratulations to everyone who day traded today to the downside, whether you bought puts. If you're a swing trader holding long, or you're a long-term investor, we've got some more things that we need to see kind of unravel here before, you know, we completely lose our shirts off the back. But it doesn't look good, right? Let's hope for an immediate hold, an immediate stand here by the buyers, because literally today on September the 3rd, there was no buyers in sight. That's not what we want to see, especially kicking off into earnings season and going into the, you know, the end of the year. We do not want to see that, right? We want to see the buyers step in and hold these prices up a little bit. We don't want to continually see the, you know, these lower highs get put in on the macro charts, right? The daily, weekly charts. If we were to just quickly look at the weekly chart on the triple Qs, not only did we get rejected, but we've got room down all the way to $433. Okay, so doesn't look good, right? If we continue to push down lower this week, you know, into a range of 450, 452, and next week we confirm this week's lows, that next stop is going to be 435. Okay, so with that being said, I hope you guys enjoy the video. Stay safe. Definitely size down in this environment. Okay, the ranges are a little bit more spready. The volatility is a little bit more high. So we don't want to go max size on all of our trades. Maybe we want to cut that position size down in half, take things a little bit slower. Maybe just look for that one opportunity a day. If we get it, we get it. If we don't, come back for another day. Again, remember, when you're trading stocks and you're trading options, you're not necessarily going to get setups that are happening every 5 minutes, every 10 minutes. We need to let these trades develop, and we need to strike at the best potential times, at the best possible times. So for me, a short below today's lows, I'm all over it. And to the long side, I'm going to need to at least see a day or two to reclaim some of this upper supply that we've lost before I'm even interested in the long. Okay, any gap up, any green open, I'm looking for the rejection for the short. Okay, that's just me, but again, I've seen this play out more times than not. Now, my bias can completely change come Wednesday, come Thursday, come Friday if we start to reclaim some of these upper levels of supply. But until we do that, I'm going to lean a little bit more with the shorts. I'm going to lean a little bit more with the continuation of this back test that we've started today. Hope you guys enjoy the video. Make sure to like, comment, subscribe. If you guys are looking for one-on-one coaching, you're looking to join a community, you're looking for my private lessons on Discord, definitely join. That link is down in the description box below. I've got 2 spaces available for September. I'd love to see you guys in the room. To everyone else, good luck, stay safe. I'll see all of you guys back on YouTube tomorrow.